All right, welcome. Great to have you here at today's session. And it is about 5 minutes before we actually start. So, welcome to today's session. It's great to have you here early. And that way we can check how everything's going, make sure the technology is working. So let's do a quick little test. So Frederick already let me know that everything's working, but everybody else, if you see a screen that says to interact during the webinar, now this is for those of you who are on GoToWebinar. Some of you are listening in via the YouTube stream, which we're trying to stream it on YouTube as well. So John, Frank, Nathan, Jean-Pierre, Frederick, thank you. So if you can find your little chat box, if it's been on your screen for a little bit, it might have minimized. See the little orange arrow? Click on that. And then let me get my little laser pointer. You can probably see my pen a little bit better. Just type a yes in that box, or just tell me what time it is by you. That'd be great. We are about 4 minutes before we actually start. Today's webinar is going to be very interactive. So good thing you're here early and we can check things out. So you see a bunch of people at the same time as what I've got. 426. Gianni, 2127. 426. Brad from Loomis, California. 326. Jean-Pierre from Belgium. Great to have you here. 127, Alan, California time. 227, says Joan. Great to have you here. By the way, let me actually have you type in something else. Now that I know kind of where some of you are located, in the chat box, let me know what's been the hardest part for you about investing in the stock market. Today was a fun day, right? Down, then up, right? So what's been the hardest part for you? Let me know in the chat box. Today's session, by the way, now that we're getting more and more people in the room, today's session will go, there's actually a hard cutoff today, believe it or not. Usually I try to stay around as long as possible to answer as many questions as possible at the end of the session. But today I actually have an award ceremony to go to for my son, and I don't want to miss it. I'm sorry. I want to make sure I'm there for my son. So there's a hard cutoff, which will be about 70 minutes from now. So the webinar usually goes about 60, and I'll try to stick around for about 10 minutes of Q&A. Does that sound fair? All right. So that's a kind of a hard cutoff today. So on my clock, 5:40 in my time. Yes, Alan. Thank you, Alan. Sun is very important. Sun is very important to me. So thank you for letting me know that you're on board. So Paul over on the YouTube stream says, when to buy is very important. So let me read some of these that are coming in. Market volatility. I see timing, when to sell, volatility, getting the time right. A few people said volatility, what to sell and when. Knowing when to buy or sell, says Joan. When to sell, says Steve. When to just eat my loss and picking just one strategy, says Keith. Trying to figure this all out on my own, says Morgan. Make some, lose some. Need consistency, says William. Knowing when to sell, setting stops, how to get started. Whipsaws, says Dean. Yeah, so I'm seeing kind of the big, mostly the big two, which is, when to buy and when to sell. I did see some about volatility in there. Not as many people saying picking the right stocks. Usually I see more and more of the picking the right stocks when the market's going up. That's a hard part. But when the market's been doing what it's been doing over the past couple weeks, if we were to do a webinar like this, like we're doing right now, and by the way, this is live, when we do a webinar like this at this time, then it's usually, hey man, I really need to know when to sell. Like that's kind of the biggest one. So this webinar, by the way, if you're looking for the when to buy and when to sell, we will be covering that today. So you're in the right spot, right? And the other thing that we're going to be looking at is picking the right stocks. We're actually going to go in that order, and I'll tell you more about that right now, actually, because it is 4:30. So just for those of you who just joined, we had a bunch of people just come into the room. We're about to start the main webinar. We're just doing a little bit of getting to know you activity there at the beginning. This webinar is about a 70-minute webinar, so we're going to get things started Give me just a second. I am showing my screen all over the place, which is good. And let's officially start. Welcome to today's session. This webinar, as you see there, is titled The Successful Investor. My name is Brian D'Amico. I'm really excited to be here. All right. I love teaching this webinar. I love seeing the transformation just in the 60-minute webinar that people make. All right. So I love seeing that transformation that people go through just in this one webinar. Today, we're going to be looking at how to buy and sell stocks to consistently make 15% a year. There's going to be some years where you're going to be lower than that, right? Some years are going to be greater than that. You're going to see some examples of people today that are double that. All right, so but we're targeting an average of 15% a year. Why only 15%? Well, 15%, you're going to be doubling your money every 5 years, right? Which is nothing to shake a stick at, right? It's pretty good to be doubling your money every 5 years, especially when you're using a very prudent, low risk, a low time intensive thing such as just very simple buying and selling of stocks. All right, so I'm excited that you're here today because I know this information will help you out. One thing I want you to understand is that until you know what we're going to cover today, right? Until you know how to do this right and take control of your own money, you're always going to be at the mercy of outside forces, like what the government says you can get and when you can get it, what interest rates are. So you want to be the one in control. All right. And my promise today is that in today's webinar, you're going to see that you can safely and steadily grow your portfolio every year without taking unnecessary risk. And you can have the confidence of knowing when to be buying and when to be selling. All right. And the one big thing is this is a theme that we're going to be covering throughout today's session. The theme that we're going to be covering through today's session is that your system is the thing that determines your success. All right. And when I say system, we're talking when to buy, what to buy, and when to sell. Okay. That's why today's webinar is broken into those 3 areas. So, by the way, some of you are at today's webinar and you are already a successful investor. Like you're doing pretty good. All right. Today's webinar will hopefully make you even better. I'm pretty confident that it will. You're going to learn something. All right. Now, if you're struggling and you're at today's webinar, which a lot of people tend to be if they come to this webinar, if you're struggling and you're unsuccessful, you'll be able to turn that around and become successful with the information you're going to learn today. To put a face to a name, this is me. This is me. I don't usually wear a suit too often, but that is me in my suit. So my name is Brian D'Amico, investing coach here at VectorVest. In fact, I'm just one of many coaches here at VectorVest. VectorVest has been around for over 30 years, since 1988. We've got an entire team of people here to help you. I let you know that just so you also know that we're not just some fly-by-night company that's here doing training that we kind of hope works and we want you to join our YouTube channel or something. No, VectorVest has been around for a long time helping people invest in the stock market and do it successfully. And the only way that we can be in business for this long is if what we teach you works. So I'm glad to be a part of this team and I'm glad to be here helping you and I'm glad that you're here as well. All right. Now, over the years, people, when they come to VectorVest for help, a lot of people say things like, I feel my account's going nowhere. I feel like I'm just kind of spinning my wheels and I'm afraid I might not have enough money to retire. We're like, all right, well, let's kind of figure out a plan to help you get to where you need to go. So we want to make sure we're on the same page. Like, hey, you're not looking to get like $1 million tomorrow. No, they say, well, no, I'm not looking for that. I'm looking to just consistently grow my account steadily each year. And kind of like what I was saying earlier, doubling your money every 5 years is great, right? The other thing that they're looking forward to is to be confident in themselves, that they could be self-sufficient and able to provide for themselves and their loved ones. All right, so by learning what we're going to be covering today, you're going to be able to do things like that, right? And I want to help give that to you. So today's journey, we're going to be looking at a few things as part of today's webinar. You're going to see the first part, the exact criteria to use to pick the right stock. So you're not sitting there wondering if you picked the right one. So we're going to look at the exact criteria. The second part here is 3 keys to be buying them at the right time. All right, so we'll take a look at that. And then we'll be talking about when to sell your stocks. All right, so today's webinar is built on results, not just what we do here at VectorVest, but also the clients that we teach. So throughout today's webinar, we'll be sprinkling in some case studies of people who have done what we're teaching, and we're going to show you what they've done in the techniques that you're going to learn. For example, Ross, he went from being haphazard and time-consuming in his investing with below-average results, And he was, after he learned what you're going to learn today, 33% in 6 months, right? 6 months. Let's put that S at the end, and doing with very little trading. So that's one of the cool things about what you're going to learn today is it doesn't require a ton of trading. All right, so we're going to take a look at that today. Tim, who went like he's trading in the dark, like he didn't know what to look at or where to look, to where he's on target to do 30% during the first year. In fact, in about 6 months or so after he learned the system. So we'll look at that. Kamel, who actually, he said his trading was stupid and undisciplined. And in fact, Kamel said he was about to give up, right? Just give up on investing because he felt like a failure, to where he was doing 22%. In fact, he shared a couple of his portfolios that we'll look at today, and you'll see the turnaround that he made, and you'll see the techniques that he did to do it. Right? That sounded weird saying it out loud, that he did to do it. Well, hopefully it sounded good to you. All right, so now's a good time to turn off all your distractions. Don't multitask. If you have a cell phone, just turn it off, close your door, and really focus for the next hour. All right, so in today's session, it is very interactive. I'm going to ask you a lot of questions throughout the session. So use that chat box like we did at the beginning of today's session. We've got about 1 hour. In fact, I told you at the very beginning that I have a hard cutoff today due to I want to go to the award ceremony for my son, and I would need to leave here in about 60 minutes from now. So that's a kind of a hard cutoff of today's session. So that's about as long as the webinar would go. So I promise I'm going to give you everything I can during this hour, and we'll spend some time at the end for some questions. And of course, my team is here to help you out as well in the background to answer some of your questions as well. So it's not just me. I've got some team members here, so you can feel free to chat in the box. My team members will do their best to answer you in the chat box. All right. At the end of today's session, if you want more information, I'll try to point you in the right direction because, like I said, there's only so much we can cover in 1 hour. All right. So if you're good, all right, if you're good to go, give me one more yes in the chat box, and we will kick things off. And we'll start off with how to pick the right stocks. Gigi, you're first. Joan, Maria, Gianni, all yeses, straight down the line. Let's talk about how to pick the right stocks. All right, so how to pick the right stocks. This is first, of the 3-part system, when to buy, what to buy, and when to sell. We're going to start with what to buy, because just because you might know of a stock because it's a well-known company doesn't really mean you should own it. Right? Should you own GameStop right now? Should you own Tesla? I mean, there's got to be a way to pick the right one. All right, so there's a right way and a wrong way to choose your stock. So here's a stock you might think is good to buy, right? But after you buy it, it might go nowhere or it might go down. And you're left wondering, what on earth just happened, right? You ever feel that way? You buy a stock and it goes down, you're like, what just happened? I thought I picked the right one. So let's talk about some of the problems that cause this to happen. All right, let's talk about some of the problems. Problem number 1 is you're buying stocks that were already going down. All right, so what you're looking at here is this is just that same stock I just showed you. Right, this is the same stock I just showed you a moment ago, except I zoomed out a little bit to give you a bigger picture. Most investors have been trained to buy stocks that look like this, right? Because you might hear about it on TV, or the big thing is advisors would say this is, all right, let's get into this stock. Let's dollar cost average. Let's get in now because it's lower. And let's ride this thing back up. Right? You can share in the chat box if you've ever heard that from somebody. Let's buy low, because the stock has dropped, and let's ride it back up. Exactly. I'm seeing some yeses in the chat box. All right. So problem number 1 is you're buying stocks that are already going down. Why is that a problem? Because typically stocks that are going down, they typically continue to fall. All right. So I see Branch, Wayne, Bradford, Tyrone. They all say yes. All right, problem number 2 is you buy just for the dividend. All right, we hear this all the time. We do coaching every week with our clients, actually every Thursday. And most weeks every week people will tell us about stocks that they own, and we'll have to take a look at them and help them with the stocks that are in their portfolio. And sometimes we'll say things like, well, this stock is down. Based on all these indicators, it's something that you should consider selling, or at least draw the line in the sand here. And they'll say, but it pays such a nice dividend. So the main point here is, if you're willing to let stocks drop 20, 30, 40, 50%, all for a 3% dividend yield, you're never going to outperform the market. You're never going to consistently grow your account, suffering those big losses. All right, so you can't just focus on the dividend. Dividends are good. All right, dividends are a nice plus, but don't get fixated on the dividend. That's problem number 2. Problem number 3 is you just buy for the company name. And like I said before, just because you might know of a company like Apple, McDonald's, Disney, or whatever, it doesn't mean that you should own them right now. Right? There's got to be some criteria that says, yes, this is a good one to buy. All right? But the real problem isn't necessarily like 1, 2, or 3 that I just talked about. This is the real problem, is that you didn't have any buying criteria. Right? You didn't have any buying criteria to begin with. Right? When you have no buying criteria, this is what you're left saying. What should I look for? And if you don't know what you should specifically be looking at, right? If you don't know what specifically to look for, you know what the market's going to do? The market's going to give you a lot to look at, right? That's just a handful of some of the things that that the market will give you to look at. All right? And if you're looking at all this stuff, trying to sift through data, you're left blurry-eyed, you're spending hours doing it, and you're left wondering, well, did I pick the right one? Like, you're always left wondering if you picked the right one. And if that's where you are, the result is you hold on to bad trades too long. And you start saying things like, well, I can't be wrong. Like, because you convinced yourself that you bought a good stock. Right? You thought you bought a good stock, and it goes down. You're like, well, I can't be wrong. And then you eventually say things like, it'll come back. It's something else's fault, not my fault, because I picked a good stock. Right? So what you need is buying criteria. So I want to give that to you right now. Here's 3 criteria to use to pick your stocks. Okay? So you can draw it out right now. Let's draw it out. There's 3 pieces. I usually put it out as a triangle like this. And then after we draw it out, we're actually going to take a look at some examples. And then I'm going to do a little test with you. And you're going to start picking out some stocks. All right? So let's draw this out. The first part is going to be earnings. There's going to be an earnings criteria. The second part is going to be a safety criteria and then a trend criteria. So those 3 things, looking for, again, what we're doing here, by the way, I didn't mention this earlier, we're looking more position trading. We are not swing trading or day trading here. All right? We're looking for something that is low stress and you can sleep at night owning these stocks. Right? So earnings, we're going to look at 2 things, that they're rising and positive. Right? Yes, if they're rising and becoming less and less negative, that's okay. But we would rather have rising and positive, and I'll show you what to look for there. When it goes to safety, we're going to look at a 1-year chart to start with. Right? And then from a 1-year chart we're doing this to get a feel for not only the earnings history, but we're also doing it to get a look at the stock's volatility, its price movements, whether it's over or undervalued. All right, so we'll start with a 1-year chart, go out to 3 and 5 years. All right, so and like I said, we're going to take a look at its relationship to its value, and I'll show you that too. Trend, we're going to look for a smooth and steady price trend. All right, in addition to smooth and steady, we want it to be going up, and some people don't know what it means to be going up, so we're going to be looking for higher highs, right? Higher highs and higher lows, not just up on a day-over-day basis. All right, so to visualize this, let me just show you a chart. And by the way, it doesn't matter, what dates are along the bottom. I could show you charts from 1920. Right? In fact, I was reading an investing book, and all the examples they're from like 1900. All right, and it's really just the pattern that we're looking at here. That's the important thing. So let me get my where's my mouse? There we go. Let me get my pen, and I will choose this color. All right, so by the way, this is a 5-year chart. We usually start with a 1-year chart, and then we expand it out, but I just wanted to save some time and go over and just show you 5 years all at once. So just so you know, there's like 1, 2, 3, 4, 5. One of the key things that you want to be looking for when you do expand it out is the fact that over the time period, that over the 5 years, it's higher each 1-year segment, right? Why is that important? Well, if you buy it now, you want to put probability on your side that over time it's likely to be higher in the future. All right? And when you pick stocks that do this over history, you're just putting that probability on your side. All right, so that's part 1. The other thing that you want to do is when you're looking at these charts, try to get it so if you were to draw like a 45-degree line, you want the price to be close to that line. And you can see this one kind of hugs it fairly close. You don't want a stock that is higher here compared to here, but the path to get there is like this. You don't want that, all right? Because that you won't be able to sleep at night if it does that. And most likely when it has one of these big pullbacks, you probably would sell it and you would never experience that full run. All right, so those are a couple of big things with price is uptrending, higher highs, higher lows, smooth and steady. That's kind of the key term, smooth and steadily rising prices. Well, what helps stock prices go higher over time? It's earnings. All right, now earnings can be tricky if you don't have the right way to find out the data. All right, in the chat box, let me know. I think a lot of you do use VectorVest. You can see I'm using a VectorVest tool right there. You can see the VectorVest tool. If you use VectorVest, just give me a yes or a no in the chat box. By the way, if you say no, I'm not going to kick you out of the webinar. I see one no come in. A bunch of yeses, a few no's. If you say no, don't worry. If you want to use it, there's a way you could try it. Like there's a free, not a free trial, but a really cheap trial that you could always take out. But all you people who are saying yes, you'll see some of the benefits of what I like. But let me just show you what you need to be looking for. As far as earnings goes, now I like VectorVest because it just gives me this one number, which is called earnings per share. It's a forecasted earnings per share. We take into account things like the historical earnings, the current earnings. We look at all the forecasts that are out there and we put it all into this one number. And all you have to do is then look for this earnings number to be going higher like this. Now, if you don't have a way to do this, you'd kind of have to dig around for the earnings reports yourself. But the key thing is you want earnings to be going higher. Why? Because earnings is the engine that drives stock prices higher over time. All right? Without earnings, there's no way the company can continue to grow. All right, so this is what pushes this up. All right, so they work together as a team. So you want steadily rising prices and rising earnings. Okay? So when you're able to look for things like this, it really starts to build that confidence that you picked a good stock, right? Let's compare that to this example. All right, we looked at Windstream earlier. I use it because it's a real example from a gentleman named Steve. You can see we've been coaching people for a long time. This was back in 2015. I use this example because it covers so many things that I want to teach you in one example. All right, so Steve had said, he came to our webinar, one of our coaching webinars, and he's like, you know, guys, what do you think about Windstream? I just bought it 2 days ago. All right, and if I get my mouse over here, if you look over here, that means he bought it. That's the day he asked us the question. He bought it here. So he bought it on the last green day. And I mean, has that ever happened to you where you buy and then it does nothing but go down after that? Exactly, right? So that's what Steve was feeling. He's like, what do you guys think? Well, we just went through the checklist with him. We said, Steve, it's very simple. Let's take a look at the criteria. Well, price is hitting lower highs, lower lows. It's in a downtrend. Earnings is going lower. VectorVest actually calculates a thing called value, right? And that value is going down and price is over the value. All right, so we're like, this meets none of the criteria. So what did Steve do? I mean, we couldn't tell him to sell it. We're not financial advisors, but we laid out all the facts, and he said, all right, well, I'm selling it now. All right, because it was early on in his mistake, and he was able to say, all right, I'm going to cut bait. I made a mistake. I'm out. It was a good thing he did. It continued to fall, which typically happens when stocks are in a downtrend like that. And when stocks are going down, they continue to fall, especially when they don't meet any of the checklist. And then it fell 10% and then 62%, right? 62% it dropped to there. In fact, that was only after a few months. I looked back at it a couple of years later. I was like, jeepers, this thing is down to 20 cents. So the company filed for bankruptcy, right? So I don't even think you can find it in the system anymore, all right? So imagine, Steve, if he didn't sell it. On these little upswings, and have you ever been there where you just get so hopeful, like, oh, now's the time it's going to come back, and then it falls, all right? And then upswing, hopeful, and then what happens 2-3 years later, you're still holding on to that stock. Here's the thing. How do you prevent that? The first step is you have buying criteria, and that's why we're covering that first. Have buying criteria. All right, and we'll talk about stops later. When you follow buying criteria, like a buying checklist, you can do things like this. This is a stock that was in our portfolio. We closed it a couple months ago. You see, we held it for a few months. It doesn't matter the ticker symbol so much, just that the stock was steadily rising. We bought it over here. Earnings was going up, and you're going to be able to find stocks like this quite often. All right, and the stock continued to go up, and then it met our sell criteria over here. All right, and we walked away with a 25% gain in about 3 months. All right, so when you follow the right buying criteria and use the right entries and exit rules, which we'll talk about later, you can experience things like this. All right, here's another one. It doesn't matter the ticker symbol. We're just looking at the price pattern. Smooth. Even the downtrend was smooth. And then you don't buy as it's still falling. It started to go back up, and we buy it over here. All right, and earnings were rising. That's what you're looking for. That's the main point of what I'm trying to get across here. Smooth, steady, rising prices, rising earnings. It then pulled back, met our sell criteria, walked away with a 15% gain in about a month and a half. All right, and then here's one you probably know, Lowe's. This is beautiful, smooth and steady, rising earnings. It continued to go up, smooth and steady, hit our sell criteria, 23% in 3 months. All right, so all you have to do to put probability on your side is have that buying criteria, and you've already set yourself up for a higher probability of success. All right, so let's do some examples together. All right, so let's do this together. I'm going to give you some examples, and in the chat box, just give me a yes or a no on whether you think it meets the criteria. All right, and you're going to prove to yourself that it's fairly simple. Just give yourself 3 seconds to look at the chart and give yourself an honest, yes or no, maybe even a maybe in the chat box. All right, so again, this is a 5-year chart. So, like 1 year, 2 year, 3 year, 4 year, 5 year. All right. Oh, wow. The chat box is filling up with no's. All right. Yeah, this is a definite no. I wanted to start out with something easy. This should stand out like a sore thumb. Price and earnings both falling. So if you see something like that, you immediately go to the next one. How's that? And again, remember, 5-year chart, roughly putting 5 years on there. Yes or a no? All right, the whole chat box is filling up with no's. I see 3 people put in maybes, 4 people put in a maybe. Here's the thing. The thing that is probably making you say maybe is earnings, right? Right? Earnings is good, right? That's acceptable. But what is not acceptable is this. This is about 1.5 years of a downtrend. That is not just a mild pullback. Number one, we don't buy stocks that are still falling. And number two, especially if they're falling for 1.5 years. All right, so it definitely fell out of favor. So that is a no. Why is it a no? The other reason? Take a look at this. How does that look to you? Yeah, because things like this will stand out and you'll be like, wow, I don't know why I was even considering that maybe, because you'll have stocks that look like this. And when you see this part, that's because the overall market just really pulled back at that time. So you really give those stocks a pass. When the market hit bottom, the stock resumed its uptrend with rising earnings. So that's a yes. This one here, that's about 4 years, and then this is the past year. All right, so you see things like this, that's where the no's should come in. Like, why would I do this? Because example number 5 looks like this. You might think this is the same as example number 3, but it's not. There are tons of stocks that look like this. Rising price, here's that same pullback because the overall market, and the stock price resumed with earnings. All right, so give yourself 2 or 3 seconds to look at charts, and you're going to be able to find some really, really good ones. All right, just putting probability on your side. All right, so first question I have for you is, just by using that simple checklist, are you starting to get a little bit more confidence in yourself about your stock picks? Like, give me in the chat box, how about this? Type in more or less. Are you more or less confident using a system like that? So I see more. I see Patricia, Wayne, Alan, all say more. Exactly. And that's what you want, that confidence, because the confidence, then you're like, all right, now I own it. I'm pretty confident about my pick. Then you can feel good about managing that position moving forward. All right. That's what Ross felt. Here's Ross. Ross, when he first came to us, he's like, I have no system. All right. This is his journey, right? No system. He spent a bunch of money on newsletters. And this is a person that he told me he was experienced as an investor. But experience doesn't mean success, because he's been around a while. He's spent a lot of money in newsletters. He's got a time-consuming system. He was over trading and not successful. But he was determined to turn things around. So what did he do? Notice the second bullet point right here. He focused on safety and earnings. That's exactly what we were just talking about here. Right? He's focused on safety and earnings. The other thing he did was he didn't just put it all into one industry. He was diversified, and he was able to get 33% in 6 months. All right, using the checklist that we're talking about and the other things we'll talk about today. And now he's only spending 15 to 30 minutes a night managing his portfolio. And like you guys just said in the chat box, he's more confident and relaxed. And by the way, he's having more fun. All right, that's the other side benefit. So I want to have you move from being uncertain, right, where you're like, did I pick the right stock, to where you're pretty confident that you picked high probability stocks. Okay, so make that shift, right? Make that shift because that's one part of your system. The way you are picking your stocks is one part of your system, and it's needed if you want to consistently outperform the market and get that 15% per year average. All right, so let's talk about step number 2. All right, step number 2 is buying these stocks at the right time. Because now that you know the stocks that you want to buy, that's one thing. But now you got to know how to buy them at the right time. All right, a lot of people have been taught that philosophy of buy and hold, right? Because they say, well, just buy anytime and just hold it. Well, but that turns into buy and hope. All right, so the thing that's been tough recently for a lot of people has been the market ups and downs. And like 3, 4, 5 of you in the chat box at the beginning shared with me, you were saying volatility was kind of driving you bonkers, right? The end of 2019 was good. Then we know the beginning of 2020 was not good. Then the blast off phase off the bottom, it did have some wiggles in there, but it went up, then pulled back, went up, pulled back. And then heading at the end of 2020, it was good. And then the beginning of 2021 has been a little bit where you're pulling your hair out a little bit. And I can't lose any more hair. All right, I don't want to lose any more hair. When you're going through this, it feels like you're going through a portfolio roller coaster. And just like a roller coaster, it's like slow going up. And then if the market pulls back, it goes down fast, just like a roller coaster. All right, when you're not able to buy stocks at the right time, that's what it feels like. And imagine for a lot of people, their investing experience is like getting on the roller coaster at the top. Right? They buy at the wrong time, and the only thing they experience is the down. And it takes forever to make it back. All right? And you're also left second guessing yourself. You're like, oh, I got a good stock, but is today the right day to buy it? All right, so let's talk about some of the problems that are causing the stocks that you buy to drop after you buy them. All right. Number 1 is you picked a bad stock. And we talked about this earlier, so I'm not going to go through it all over again, but you could have just picked a bad stock. Maybe it was volatile, it was in a downtrend, it had falling earnings, whatever, it was a bad stock. So picking a bad stock is one reason why the stock that you buy goes down. All right, well, that's problem number 1. Problem number 2 is maybe you got some bad advice, right? Because you might not have been confident in yourself, so you went to somebody else, whether it be the TV or an advisor. And advisors aren't necessarily bad people. They're just giving you advice that they were taught, which is to buy anytime. Right? Wherever you got your advice, most of the people teach it's always a good time to buy. Right? And it's not. Right? So problem number 3 is you feel you have bad luck. The thing about bad luck is there's no such thing, but if you feel you have bad luck, you're going to cause bad things to happen to yourself, because you're going to buy a stock and then the next day it goes down and you're going to say, here we go again. The market hates me. They wait for me to buy, and then the stock goes down, and then you sell the stock. And then what happens the next day? It goes back up. And you're left blaming the market and blaming bad luck, and it's really because you just weren't following the right system. All right, so if you feel that you've got bad luck, you're typically causing bad things to happen to yourself. But the real problem is just bad timing. Like somebody said in the chat box, it's bad timing. All right, even though the market has its ups and downs, we can still get in at a better time, right? There's a right time to buy. You want a big sign that says now's a good time. So I'm going to give you 3 keys, right? In the time that we've got today, we have time to go over 3 big ones. We actually have a more detailed course called The Successful Investor, where we actually spend time going through, well, how to identify the bottoming phase of the market, an explosive phase, a trending phase, and a topping phase. So there's some other things to get into more fine details. But today, let me give you some of the big ones to look for. The first one is the market. This is the most important one. The market has got to be in an uptrend. You know that saying, a rising tide lifts all boats? Well, it works for the market. If the entire market is in an uptrend, that means most stocks are going up. So your chances of buying a stock and having it go up are increased. Okay? If you continue to buy as the market is falling, results can be disastrous. And I'm going to show you this one right here. This is an example. I know this was during the global financial crisis, but some people let us know that this happened to them last year, because the market last year during the COVID dropped 40%, just like it did back in 2008. So you can just say, oh, well, maybe he retired in 2020 and this happened. Well, so Robert here, he had a professional advisor. After Robert had retired, the professional advisor said, yeah, I know the market's going down. Let's ride it out. So as the market was going down, what they were doing was selling stocks and buying new ones, selling stocks and buying new ones. And he lost 40% of his retirement. Well, that's not good, right? We don't want that to happen. So here's a 20-year look at the stock market, right? And this right here is 2008. Okay, and actually, let me change the color of my pen because red is not going to work, especially with red candles on the screen. Let me get there we go, little doodles. All right, the point I'm just trying to get across here is that it does not have to be a financial collapse for you to lose money in the market. All right, what I want you to understand right now is that the market has trends, and I hope you can see that right here. That this is a 3-year, this is a 2-year period, like 99, 2000, 2001, a few years. And look at that. Would you say that the market was in a downtrend during that 3 or so year period? Yeah. Would you say it was in an uptrend during this period? It was in a downtrend here, an uptrend here. You rinse and repeat, right? And within those little trends, there are shorter term trends that you could take advantage of, like in here, and so on. All right. What you need to be doing is you got to have a mentality of don't try to nail the bottom of a market. All right. So I don't want you to sit here and say, all right, I got to get in. I got to be the first one in. Let me try to nail the bottom. You don't have to do that. Don't be the first buyer. All right. Wait for the market to start to go back up. Right. And buy as it's going up. All right. Just hop on board. Okay, don't try to nail the bottom, because what a lot of people did is they tried to buy here, trying to nail that bottom. They're like, oh, this is a big down day, let me get in here. And they're just riding this thing all the way down. All right, so you got to have signals telling you that the market is in an uptrend. All right, people who say, oh, well, but, Brian, this market is higher. Look at it. It's way up here right now compared to where it was over here. I should listen to the gurus out there and buy any time because it goes up over time. Well, if you could avoid it, if you could avoid the downdrafts, wouldn't you want to do that? For example, what if you bought like right in here and all you experienced was this right out of the gate? You are now spending 1, 2, 3, 4 years getting back to where you were. All right. And now, yeah, the market's going up. But if you could have avoided buying during this period here and maybe started buying here, isn't that better? All right. So that's what we want to do. We want to not buy here, like stop buying in here, and start buying when the market is going up. All right, so how do we do that? Well, I'm going to zoom in and show you what we do here at VectorVest. Here at VectorVest, we use a thing called green lights to identify when the market is rising week over week. And I'm going to put those on the chart here. The green arrows represent the times where we identify a green light in our system. And I just want you to notice when the market's going down, there's a lack of green lights. When the market's going up, that's where the green lights are. Actually, I circled too much because right in here, you don't see green lights. I'm not very good at drawing straight lines, by the way. Market is going down, no green lights. Now, I'm not saying that there's going to be no green lights ever, right? Because there's going to be a time like that. Here's a downdraft, and here's a green light because the market just happened to peak up enough to trigger a green light. But do you see a lot of green lights in there? No. So maybe you would have bought one stock there, and then the market reversed. Big deal. You're not overly exposed to the market. All right. And then you just, oh, here's another green light. And now you're stepping back in. You're stepping back in as the market's going up. All right. So you're able to avoid buying all through here and start buying here. Much better of a system, right? So look for those green lights. The second thing is your stock's got to be in an uptrend. And we did talk about this earlier, but I want you to make sure that the stock is doing what you want it to do. All right, before you buy the stock. All right, here's Windstream. We already looked at this example, but I want to point out another thing is how do you know when stocks are moving down? Well, lower highs. You see that? Lower highs, lower lows. And that's what the other thing we pointed out to Steve, and he actually bought it when it was hitting a trend line. You don't want to do that. All right? So you don't want to buy stocks that are in clear downtrends. Okay? Because we already looked at what could happen. What you want to do is buy stocks that are doing the opposite. And we already talked about this earlier. You know that it's doing the opposite because it's hitting higher highs and higher lows. All right? And we also talked about earnings. But we want the stock to be moving higher. All right? The other reason that looking for higher highs and higher lows is important is because when it starts to hit lower highs and lower lows, you know that uptrend is definitely over. And you could think about closing out. All right? Now, the third thing that you want to be looking for is stocks to be clear of resistance. All right? So resistance is like a ceiling. And it'll make more sense if we look at a chart here. All right, so here's a graph of CNC. It's a great looking stock, right, at the time. It hit a high right here, and then it pulled back. It tried to go up, pulled back. Tried to go up, pulled back. Tried again. So like right up in here is what's called resistance, and that's where you have all the previous buyers. There's just a lot of selling pressure up there because they're saying, well, if it ever gets back up there again, I'm just going to sell the stock. So that's selling pressure built in. They might have put in orders to sell that are just sitting there with their broker. So when the stock gets over here, people say, well, some people want to buy it here. That's a mistake. Because what ends up happening a lot of times is this. It falls due to all that selling pressure because it hit resistance. So what's the opposite? What should you do instead? You should look for stocks that are breaking up through resistance, that overcome all that selling pressure. So here's, again, a good stock that was going up. It pulled back. It tried to recover, pulled back. So now it's going back up. So you don't want to buy it here. You might not even want to buy it here when it's straddling, right? When it's straddling resistance. We say to be a little bit more prudent, wait for a full candle above. All right, so now you're getting a stock with rising earnings, rising price, the stock price resuming its uptrend, all right, and it busted up through all the prior selling pressure that was there. When that happens, there's a lot. Typically, it continues to run. All right, so let me ask you that we just looked at 3 keys to buy at the right time. In the chat box, let me know what percentage of the time on your trades have you looked for all 3? All right, just very quickly, you don't have to be exact. You can say 20%, 50%, 80%, 100%, zero. Philip and Daniel, the first ones in, say 0. Gianni says not at all. I see hardly 0. Yeah, so this is the thing. If it's anything less than 100, we got some work to do, right? Would you agree? There's some work to do to kind of we just got to get it up to 100, right? And that's where Kamel was. So I show you Kamel because he had no discipline. This is what he did. He bought falling stocks in down markets on down days. I mean, you remember the checklist that we were just looking at as far as the 3 keys to buy at the right time? We wanted the stocks to be rising. We wanted the market to be rising, right? So he wasn't following any of that. He would buy stocks and then he's like, oh man, I hope they come back. Eventually, he questioned his ability to continue investing. I mean, that's a really bad place to be in a spot where you're like, man, maybe I should just give up. Well, I'm glad, Kamel and all of you out there who might be feeling that, giving up is not an option, right? Giving up is not an option. You just got to learn how to do it the right way. All right? Because here's what happened to Kamel. He learned how to do it. He actually took this webinar that you're in, and he actually took that full course I mentioned a little bit earlier because he wanted more information. And I loved the Kamel because he would take pictures of his computer screen. That's why the image here is a little bit grainy because he just took a picture with his cell phone. And he's like, hey, Brian, I just wanted to show you my portfolio. And this was during the year of 2019. He's like, I'm up 22.5%. And then he showed me his retirement portfolio. He's like, I'm up 44%, Brian. And he's just like, he's so happy, with his results. And he's like, I'm not trading a lot either. And he showed me this. He's like, I'm only a 52% winner. Like he had 11 winners and 10 losers. Right? So you don't have to have a lot of winning trades to be successful in the market. All right? So the other cool thing is that he's got low emotions. He's not taking stupid actions. It's less stressful and more rewarding. All of it due to using systems that we've been talking about today. So choose from the portfolio roller coaster to where you're using entry signals. You can start with the 3 that we talked about today so that you're buying at the right time. All right? So you need to use a system, kind of like this successful investor system we're talking about today, to start buying at the right time so you can start to see that steady climb in your portfolio instead of the roller coaster. Right? That's the only way you're going to consistently outperform the market. So now let's talk about when to sell. All right, let's talk about when to sell because this is a tough part for a lot of people. All right, because there are situations like this where you have a stock that's going up and you see it pull back and you might be thinking, well, Brian said don't buy it while it's pulling back. Buy it on the bounce. But then Brian said don't buy it when it's at resistance. And then it breaks up above resistance and you buy it. And you're like, all right, great. Now I got a winning trade. Well, the downside is you watch winners turn into losers because you don't know when to sell them. And then you start to suffer these big losses. And eventually 2 years or 3 years later, you're still holding on to it. And you say, well, I might as well hold on to it now. All right. It's just really hard to recover your losses when you have those big losers. I mean, just do the math. I think when you're down 50%, you got to get 60 some odd percent to get back to break even. All right. What is it? Or 100%, something like that. There's a lot of, just do some big math, do some math there. All right. So, and you start to feel like a failure and you don't want to be in that position, right? What is it? When you're down 50%, you got to get 100%, right? To get back to break even. So you need to know your exits. That's the key. Just like a plane, right? Just like when you get on a plane, they tell you how to get off the plane before the plane even moves. So in the time that we've got today, I want to give you 2 big exit criteria. One for a loss, one for locking in profits. Again, if we had more time, like in that full course that we teach, we talk about, all right, well, how to take advantage of those gapping stocks or locking in the stocks that turn parabolic and go really high on you. We talk about things like that, but I want to give you 2 things in the time that we've got here. All right. Number 1 is to set your line in the sand. Number 2 is to never give back more than half of your gains. All right. So let's specifically look at those 2. The first one, set your line in the sand. All right. Setting your line in the sand. Here's UVE. All right, UVE. Looks like a good stock going up. Started to hit an area of resistance, full candle above. We're thinking about buying it. By the way, we track a paper portfolio with our clients every week. So we're showing clients on a weekly basis these trades. So where do we set our stop? So the key thing is no matter where you set your stop, you've got to set one. Now on the stocks that we're talking about with you today, you want to give them enough room to breathe. All right, remember that phrase, room to breathe. So here at VectorVest, we use a thing called, we calculate a stop price, which is based on a 13-week moving average, but we adjust it for the fundamentals. That gives good stocks enough room to breathe. And you can see, look at it, the stock's going up and down. The stop was way down here. So we're buying it here. Our stop, our line in the sand is down here. So that's going to give it room to breathe. It doesn't mean you will never sell it. It just means that it's going to give it room to do its normal thing. So there's our entry. Well, we thought we hoped it would continue to go up, but we were prepared if it didn't, which it didn't. Right? It went up for a couple of days, but then pulled back. During the day, it got stopped out unemotionally, right? Unemotionally, you sell it, right? And we saw a 10% loss. Why is it important to have a line in the sand? Because it's going to protect you from suffering large losses. That way you sell things unemotionally. All right, so selling when the stock was at 42-ish is a lot better than selling when it gets down to 25. All right, let's look at the other part. Let's look at locking in gains and why that's important and how to do it. Our general rule is once you're up 10%, if it starts to pull back and you're only up 5%, you sell it. If you're up 30% and it pulls back and you're only up 15, that would trigger a sell. Right? We call it the give back half rule. All right, so here's an example. We bought in on IIN here. All right, stock went up. We must have been up about 34% on this trade because it pulled back in a couple of days. We locked in a gain of 17%. Now, some people said, well, why did you sell it? Because it went right back up. All right, well, fair enough. Well, when the market went back up and the stock was still in our list of good candidates to buy, we bought back in. Bought back in here. And on a side note, since we used a stop price, which is probably down here, you see what it allowed us to do? It gave the stock room to breathe. So we sold it right up here during the day. The stock must have been up about 18% because we locked in about a 9% gain. Again, some people might look at that and say, well, why'd you sell it? Because the last time it went up. It doesn't always go up. This one fell out of favor. All right. Knowing when to sell allows you to lock in gains and minimize losses. All right. So Tim happened to be one of those buy and hold investors, but he never knew when stocks were losing momentum, and he would then just hold on to them, waiting for these stocks that went against him to come back. But once he learned the system that we're talking about here today, he was on pace to make 30%, able to make informed decisions. He actually, since he's using a low-key, low-stress approach, he's like, I only set my stops on Sunday night, once a week. Now, what we teach, and we go into this more in detail in the full course, is we'd say, you could just do this once a night. It only takes you about 10 minutes. Tim decided to do it once a week. All right? And I love this part. He's sleeping better at night. All right. I want to ask you a question. Do you know when you will sell your stocks right now? If you looked at your portfolio right now, do you know the stop price on every stock? I'm seeing my screen is filling up with no's. One person says yes. Two people say yes. But I say it's about 95% no's. I mean, you got to know when to sell. All right? You've got to know when to sell the stocks. All right. So you got to make another shift from not knowing when to sell and suffering large losses to knowing when to sell, knowing your exits, right? I mean, it's critical. You got to write this down. To be a successful investor, your system must include rules dealing with when to sell, minimizing losses, maximizing gains. It's got to have rules for all of that. All right. I mean, that's your system. And the system is the thing that determines your success. So here's a little checklist for your system. And I'm going to give you these 5 things. And next to these, I just want you to grade yourself. So number 1, do you have a market signal? And does it reliably tell you the market's in an uptrend? So just give yourself like a check or an X. Number 2, are you finding safe stocks rising in price with rising earnings? Are you doing that? If so, give yourself a check. If not, an X. How long does it take you? Check or an X. And you may be like, why do I give myself a check? Well, if it takes you too long, like you don't want to spend that much time, that's an X. Do you know how to use stop prices? And are your stops helping you protect profits and minimize losses? All right, so those were the 5 things. In the chat box, what did you just learn about your system? All right, I'll put those back up on the screen. What did you just learn? You can even share with me how many checks did you have? Are you 3 out of 5, 5 out of 5, 1 out of 5? Tyrone says, I learned that I don't have a system. Fair enough. 4 out of 5, 0 out of 5, says Joan. Alan says 2 out of 5, 2 out of 5. 3 out of 5, says Alan. 2 from Alan and Kevin. Yeah, so if it's anything less than 5, I mean, our goal is to help you get to 5 out of 5, to have a complete system. All right, so that's the next shift, is to go from no system to having a complete system. Not just use a system, but having that complete system. All right, so as you've seen, right, without the right system, I mean, you could be like one of those people that I shared with you today, that where you were buying stocks only to see them drop right away. Right? Maybe you felt like you were Tim, where you're trading in the dark. You don't know what to look at and when to sell. Right? Maybe you're spinning your wheels. All right? Maybe you're not growing your account as fast as possible. Hopefully, you were just seeing how your system is the thing that determines your success. With a good system, you have a successful system. All right? So that way you can be confident and self-sufficient. So, I mean, the obvious question that you have right now is, what do I do right now to get that system if I'm not 5 out of 5? The best way, the way that I see it is you have a choice. I mean, you could leave today's webinar and say, I'm going to try it on my own. I'll start to learn a little bit by trial and error. My fear is that you might be in the same place you are this time next year, not getting the results you want. All right? Or option number 2 is you say, you know what? I'm going to 100% commit to this, just like Kamel did and Tim did. I'm going to 100% commit to this to become a successful, confident investor this year and begin to consistently grow my account. All right, so if you're in that option number 2 area, I did want to tell you a little bit about this full course, right? So that you can continue on. I mentioned this at the beginning that, hey, I want to tell you where to go to get more help if you want it. All right, so that's where we are right now. Some of you are at that stage and you're like, yes, I would like to be like Kamel or Tim and get some more help and learn how to do more with what I'm learning. I want to tell you about that right now. If that's where you are, if that's what you want in your investing, right? Because this full course that we put together, it's called The Successful Investor, 6 Weeks to Steady Growth. It's designed to take you step by step through the system that you need to safely and steadily grow your portfolio, right? And the outcome is a complete A to Z system showing you how to do it. Before I even tell you about it, I just want to say one thing, all right? This is only for dedicated people who take their investing seriously and are willing to put time in to learn the system. Okay? All right. If you're not serious, you're not committed, or you're just looking for some magic pill to become a millionaire tomorrow, then this is not for you. All right? You might want to just log out. All right. But by learning the system, this is what's going to help you to consistently grow your account, to have more money, more freedom, more time, right? More confidence. So I just want to tell you about the modules. The way that we built this course is we go really deep on all the subjects that we were talking about here today and cover a little bit more. For example, in module number 1, it's important to begin with the end in mind, right? We want to help you align your investing style with the overall targets, right? And the outcome you get from module 1 is clear goals and objectives, all right? That way you know what type of investor you have been and how to course correct. Module 2 is all about getting into the market at the right time. Right, this is important because the market can be frustrating, as we've experienced, right? The outcome here is you'll be able to understand and recognize what the market's doing at any point in time. Right? You'll know when it's safe to buy and when it's not safe to buy. Plus, you'll understand that this is what I was telling you about before, all the different market phases. Right? We'll talk about what to buy. Right? And also show you how to find those stocks so that you don't have to waste hours of your life digging around finding them. And then in Module 4, we'll talk about when to sell. We're only able to cover 2 big things today, but there's other parts of knowing when to sell, as far as locking in gains, how to manage stocks that are moving up for you. All right, so we're going to talk about when to sell stocks, but also let me go back to Module 4. The other part about knowing when to sell is you might have existing positions right now, so we're going to help you weed your portfolio of bad stocks. Module number 5, is the trade setup game plan. This is where we're going to talk about diversification, position sizing. That way you know how many shares to buy in a position to limit risk. And then we're going to take it all the way through to the broker where we're going to show you, all right, this is how you enter your trades, to buy, to exit. This is what you should do for a daily ritual, all right, to be consistent. All right, now before I tell you about the price, all right, before I tell you about the price, I did want to let you know it is 100% money back guarantee. Whatever you spend, if you find that, hey, this doesn't help me, or if you don't feel like your investment in the course will be returned to you many times over, right, and you don't feel much more confident in yourself, we'll give you a full refund. All right, so there's a couple of bonuses that you get. Number one is how to protect and profit in down markets. We could have a confirmed down in the market, right? You want to know what to do and how to identify what's going on in the market. This is what Kamel did. He learned how to automate his trading plan, and that's what he's doing now with those portfolios I showed you where he took the screenshots. That's what he's doing. Those of you who are on today's webinar who said you are not currently using VectorVest, well, we're going to give you 60 days of access to VectorVest. That way you can use the tool to get great results. All right, so we're going to show you how to use this tool as well during the course. We're going to give you access to our high-end tool called RoboTrader. I didn't really talk about it today, but just know it's one of our high-end tools which allows you to connect with a couple of different brokers. Here's my favorite bonus, which is 6 live mastery support sessions. So you can go through all the recorded material, right? You can go through all the recorded material, and that's one thing. It's great to be able to go through that, but we don't want to just say, all right, well, good luck, right? So we want to be there, and like this guy, hold your hand throughout the whole process. So for basically the 6 weeks of the course, every Wednesday we'll get together with you on a live webinar and find out what questions you have. We'll help you with the homework. We'll help you implement the things that we're teaching in the course. Plus, we'll invite you to another coaching session that we do with our paid clients every Thursday. In that session, we'll show you how we're managing our paper portfolio. We'll answer your questions about your portfolio. So basically, you'll have 2 live sessions with us every week for 6 weeks to help you implement what you're learning. All right. So the total value of this is over $1,900. All right. So you might be wondering, all right, then what does it cost? Well, is it $1,900? Right? Is it $995? Is it $495? Well, we probably should charge those. I went to a webinar last week and they were charging $5,000 for the same, basically teaching people about the stock market and, about buying stocks. Right? But we want you to be able to enroll today and start getting results right now. All right? So in all honesty, we actually have a self-study version of this course that we sell throughout the year at $495. All right? With none of the live bonuses that I talked about here today. Today, the special event price is $295. All right? And in fact, if you stick around for just a few seconds and you want to make a decision to join today, you'll get an even more of a discount than $295. All right? All you have to do is go to vectorvest.com/TSIC. My teammates are going to put that link into the chat box for you. All right, or you can just open up a browser and go to vectorvest.com/TSIC. If you order before the end of the webinar, instead of the $295, okay, instead of the $295, you get an additional discount of $50 down to $245. All right, So that rewards you for taking immediate action. All right. So if you know this is right for you and you order now, it's $245. That's even lower than our elite pricing. All right. So that means you get the full course, 1 year of access to the course, the live mastery sessions, the live coaching on Thursdays as well. All right. So you get all that for $245. You get, if you order right now, you get access to all of the materials immediately. All right, you get access to everything right away. You could start going through the course today, right? And then starting 2 weeks from now, basically, I believe it's April 7th, we'll get on our first live session with you and start helping you every Wednesday from April 7th on for 6 weeks. All right, I asked some people what they would tell you about the course. These are people who took the course already, and I said, what would you tell people who are thinking about it? John said, this course will help you make better trades, reduce your losses, and earn more profits with less time. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Richie says, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. Robert says, it's an excellent course and well worth the money you will spend and likely earn enough in your first trades to pay for the course. Danny says, take the course, follow what it tells you. You're not going to regret it if you're serious about being successful. I mean, just think about what's your average gain been each year. All right? Think about where you want it to be. And are you where you want to be right now? And here's the key thing. Do you have a plan to get there? If you don't, ask yourself what it would cost you not to do this. All right? What it would cost you not to do this. Right? If you keep doing the same thing you've been doing, you're going to get the same results. All right? Ask yourself, how would your life be different if you do this and it works? All right? Again, 100% money back guarantee. All right? Order before the end of the webinar. Get it for $245. Go to VectorVest.com/TSIC. That stands for The Successful Investor Course. All right? I'm really excited to do this with you. My buddy Todd in the background, he teaches this course with me. We also have John in the background as part of this team here at VectorVest. We are here to help you do this. We're excited to get going because we know it transforms lives. If you are ready to join us, before we head over to the Q&A right now in the chat box, give me an I'm in. Just say I'm in. You just say this is for me. I'm in, and we'll know you're ready. Louisa, you're the first one. You say, I'm in. Steve is in. Gianni is in. Jean-Pierre is in. Renata is in. Cameron's in. Jeff says, please sign me up. Jeff, all you have to do is go to that link we put in the chat box and get yourself signed up. Benjamin, Bruce, Andrew, Mayshow, Philip, Terrence, all in. By the way, everybody who's saying I'm in, first off, welcome. And Keith says, I can't wait. You're going to get an email. Check your inbox, check your junk or your spam folder, all right? Because we will send you an email with all the details. We'll show you how to get into the course right away. Once you get in, also check your email because I have all the dates and times of the session as well. All right? So check your email. We'll give you all the details there. All right? Tyrone says, I just jumped in. Amin says, I'm in. Patricia, Rav, Ron says I'm in. Welcome to all of you. The most common question we get is, with the dates and the times. So all the live sessions for this course are on Wednesdays starting April 7th. All right. If you can't make it to a live session, don't worry. You'll get the recording of these sessions. Plus, you could call our support team and ask questions whenever you want. All right. In addition to these Wednesday sessions, you'll also be invited to our typically clients only Thursday coaching session. So you're going to get 2 sessions where we cover successful investing topics every single week. The Wednesday sessions are purely dedicated to you going through this course. Okay. So again, let me show you the link, VectorVest.com/TSIC. I've got about 5 minutes to answer some questions. Vivek is in, John is in, Alan is in. Welcome to all of you. Ron is in. All right, welcome. 5 minutes. So if you have a question, even if you've typed it earlier, can you just copy it and paste it into the chat box, and I will do my best to answer it. Once we hit that 5 minutes, I really do need to head off to that award ceremony for my son. Hopefully you don't mind, but I would ask that you give our team a call at, we're going to put the phone number in the chat box. I'll actually write it up here on the screen if I can get my mouse to work. Where's my mouse? Let's see. There we go. 10 8 8 8 6 5 8 7 6 3 8. So I'll do like a rapid fire answering of questions. Somebody says, what does TSIC stand for? It stands for the Successful Investor Course. Let's see. Luisa, you'd pay first and then go through the course. And if you feel like you need a refund, we will refund afterwards. So it's pay first, go through the course. Hugh says, what time is the Wednesday session? The Wednesday session is 4:30 Eastern time, basically the same time we started today's session. Gianni says, what should I do? I have a stock down 40%, lots of potential, but not profitable at the moment. That's a perfect question. We actually cover that in the when to sell module. One of the first things we'll do in that module is help you weed out the stocks that should not be there anymore. All right, so in this webinar, and even in the course, we can't tell you to sell the stock. We will show you what you need to be looking at and help you make the best decision. Okay? So that's something we will cover, and you can bring that stock to the mastery sessions and we can help you. Mario, says, I'm in. Philip says, tried to sign up, no email confirmation. One of the things we noticed, Philip, is just check your junk or your spam folder, because sometimes it goes there. The other thing you could do is if you still don't get it later on today, give our team a call tonight, and they can manually send it to you while you're on the phone. Sometimes there's spam and junk blockers or whatever. All right. John says, will the live sessions on Wednesdays and the coaching sessions on Thursdays be recorded? I live in Australia. Yes, John. Yes, they will. Cynthia, the session on Thursday is at noon. Cameron says, I just finished signing up and I can't wait to get started right now. I'm so excited. Awesome, Cameron. We look forward to seeing you, hopefully at one of the live sessions, but welcome to the class. Keith says, what VectorVest screeners or watch lists do you use for this strategy? That's actually, we covered that in the what to buy module, module 3. Mayshow says, give us a phone number to call as I'm not able to join online. I just put it, it's right there should be up there on the screen, 888-658-7638. Terrence says, for the next year or so, I'm living in Switzerland. I'm currently 5 hours ahead of Eastern time. Any problems for me to join? No. So you can, remember, it's all recorded. You can go through it at your own pace, and then the live sessions are at 4:30 Eastern time on Wednesdays, so it'd just be 5 hours earlier than that. Fared, the price is US dollars. Bevel, how much investment money is needed? Well, to buy the course, it's $245 right now. Whatever the broker minimum is, you could start out with. All right, so with that, folks, I'm looking at my clock. Like I said a few times today, what I'm going to do is wrap things up for the day. I really do appreciate you dedicating the time here today. Hopefully you learned a lot in today's session. And if you're joining us for the session, we look forward to having you there. All right, so yes, thank you, Frederick. I can't wait to see the award ceremony, and I'm excited. So it's actually raining here in North Carolina, so hopefully I get there safely as well. So have a great rest of your night, everybody. Thank you for being here, and we look forward to having you in class. All right, bye, everybody.